Well, thank you, Mark. Where the markets are open right now, let's get a check on what to expect and get you those stories that set your investing agenda today. Let's get a check on the FX market now. We see the Naira in the official market continue to experience sustained demand pressure with an FX benchmark rate that closed at about 1,557 Naira to the dollar. Weakness there, 0.27% down. Then we see a marginal drop. That's for the NFM window, 1,551 Naira, kind of like unchanged there, but to the downside. Then the CBN rate starts up 0.13% at 1,553 Naira. That was a close for yesterday. Investors, analysts are expecting this range will continue barring any other unexpected happening there in the FX market. Let's get a check on oil now. We see oil prices, they took a tumble in Asian trade today, marking their sixth consecutive day of losses. Brent crude futures, that's down 0.37%, $79 a barrel. Continuing that bearish sentiment we've seen, losing the $80 mark, that psychological level. US WTI crude, $75.44 a barrel, 0.51% down. Investors are watching this market to see how Trump's presidency, how that impacts. You know, it's all about drill, baby, drill at this point, and we see prices, going lower with most of the forecasts we also see from the IEA. All right, so other stories now. The central bank is set to officially launch the Nigerian Foreign Exchange Code January 28th, following its approval by the financial market regulator. In a statement, the CBN explained that the FX Code, which will serve as a vital guideline for the banking industry, is designed to ensure that authorized dealers uphold the highest professional standard and transparency when conducting FX transactions in the Nigerian foreign exchange market. The CBN emphasized that the introduction of the FX Code is part of its ongoing efforts to enhance the stability and integrity of Nigeria's FX market. Meanwhile, the Apex Bank has vowed to tackle the buying and selling of Naira notes, which has become widespread in the country. And to other matters now, the Federal Competition and Consumer Protection Commission, FCCPC, have asked telecom operators in the country to ensure that the 50% increase in tariff recently approved by the Nigeria Communications Commission must lead to improved services for Nigerian users. In a statement the Consumer Protection Watchdog mentioned that issues such as network congestion, drop calls, inconsistent internet speeds, unusual data depletion, and poor customer service have remained prevalent concerns. The FCCPC also added that consumers have consistently expressed the desire for measurable improvement in quality of service before any tariff increase is implemented. And to some company news now, MTN Nigeria has rolled out a powerful campaign, Go Make a Difference, shortened as Go M.A.D. This initiative serves as a push for Nigerians to take strategic actions that inspire change and foster community development. The telecommunications giant says it is driving progress by giving its customers the power to rise above challenges and create something extraordinary. Our correspondent, Dare Idowu, reports.
From the pawn to the king, the chessboard is set. MTN's new message is embedded in chess, the game of strategy. The Telco's new campaign is encouraging everyone to go make a difference in their communities, families, and places of work.
At MTN, we believe in driving progress, giving our customers the power to rise above these challenges and create something extraordinary. This is the very essence of our Go M.A.D campaign. It is premised on the idea that MTN data gives you the power to take on the world, to do the extraordinary, and make a meaningful difference.
From humble beginnings to becoming a global change maker, Tunde Onokoya, a Nigerian chess grandmaster and founder of Chess in Slums Africa, is the face of the campaign. Is expected to sustain the campaign's momentum through community engagement.
The truth is, as long as you stay true to who you are and to your dreams, as long as you know that the gifts that you have, the talent that you have, it shouldn't just be for you alone. The moment you can take that and give it back to the world as value, the world will celebrate you for it. So today is one of those days where I'm being celebrated for my gift, but I think everyone would also get that moment. And the day you get your moment in the spotlight, you must remember that you must pay it forward for other people as well. So which is why this entire campaign says it is not enough to gain mastery. We need to use that and use it to inspire others and make a difference in people's lives.
Go M.A.D. 2025. A round of applause for yourselves, please. M.A.D. 2025. A round of applause for yourselves, please.
As Tunde plays with MTNs led by the CEO Carl Toriola, everyone knows that every move matters and every step is calculated.
You better show me, show me, show me.
All right. It's a hot song. Please let's watch the boards.
Through the Go M.A.D campaign, MTN is reminding its customers that efforts, no matter how small, can lead to extraordinary outcomes. Like in chess, deliberate and calculated moves can create real change.
So,
All right, yeah, there you have it. Go make a difference. And I'm talking about a difference at this point. We're getting pushed back now for the approved tariff hike. That's by the NCC. Let's talk to Mr. Bismarck Rewane now, CEO of Financial Derivatives Company. Great to have you on the show. Good morning, sir.
Good morning, Laddie. Good morning to all.
Yeah, so it's still all about the tariff hike at this point. Now we're getting pushback now from the NLC, TUC, CNG. They're rejecting the 50% tariff hike. They've described it as outrageous at this point, lamenting that it will worsen the harsh living conditions, for consumers and workers. So talk to me about this pushback. How are you seeing it?
That is to be expected. The reaction of unions and industrial relations experts is always to push back on any price increase, because the price increase actually means a reduction in disposable income of the consumers. But like we said last week and this week as well, Nigeria, the consumer is becoming a king, in the sense that if the increase is matched by an increase in productivity and output, then you things get balanced out. So what are we seeing here? We are seeing cost recovery. In other words, since 2013 to date, cumulative inflation is over 150%. The providers asked for 100%, and the NCC approved 50%. So 50% divided by the past 10 years comes to an average of 5% a year, right? So basically, what you've had is a 5% increase. But the solution to this problem is that there should be more periodic reviews, either upwards or downwards. And the quality of service, like you said, you just announced that the NCC and the Consumer Protection Agency is insisting on quality of service. But I want you to understand it in this context, that if I started a call, the first few minutes have a higher tariff than the later minutes, and the call drops, then I go back again to start that call. So if in 15 minutes I had 3 drop calls, I'll find that a 15-minute call where I would have been having a tariff, marginal tariff of about 3 naira or 4 naira per minute, I'm back to the 18 naira per minute at the beginning. So you find that while in real terms, right, there's an increase in the cost per unit, in reality, effective cost per unit is almost the same. When you now look at the average revenue per user, the cost of providing that call, the capex that has been invested in that sector, you'll find that the quality of service, the increase, the coverage across the country means that, generally speaking, you might have an increase. But in any case, to start with, every cost increase there'll be pushback from the consumer, because nobody wants to pay more for what it has been paying all along. Now the question is, how do we hold the providers, the MNOs, to ensure that, one, people get quality and people get value for the money? That's the key thing. So while we have met them, 50, half a loaf is better than none, 50% of the request, we now have to hold them to their word that quality will improve and that actually the service itself and the coverage across the country will improve. I think that's a key thing. But if I was to come back to discuss for a minute what is happening in the commodity space, and I think that is very, very important for this program. We have seen in the last week, even though it's what we call the January effect, we've seen a very substantial reduction in price of trading commodities. For example, beans has come down to 100,000 naira, and that was as high as 140,000, 150,000 before now, that in November and December. Rice is down to 105. You know, rice had gone up to 120. It's now down by 5% to 105,000 naira. Palm oil came down by 13% to 9,500. And sugar has actually come down by 5% more or less to 81,000. Onions is down by 8% to 220,000. What are we saying here? One is the planting season, so prices should actually be increasing, but we're seeing prices coming down. What are we saying here is that people are now beginning to have the full effect of an increase in other prices and a reduction in taxes and subsidies on their income. And now people are beginning to buy less and look for alternatives, substitute them matter. And that is very significant. In all of this, we've seen that the Naira depreciated to 1675. Typically, in a normal cycle, in December, the Naira appreciates because of visiting friends and relatives. It also appreciates because that's the cocoa main crop harvest. So the dollars come in. Now, we've seen that happen, but the Naira did not actually appreciate, but the Naira stopped depreciating. Now, we are beginning to see early signs of some depreciation. But the difference between this year and last year was, at this time last year, in January 2024, the interest rates were much lower and so it was in February 2024 that the Cardoso team moved in and pushed up rates for the first time at 400 basis points. So it is by February this year, that is next month, that we begin to see the base effect disappear, and you now see that the currency has stayed stable in terms of its volatility.
Okay. All right, Mr. Rewane, you actually led me to my next question. As I saw on the slide there about the notable price drops with most of these commodities. So looking at, is this a seasonal thing, or is this a trend we're going to see, continue in the first quarter of 2025?
No, you see what has happened is that, let us look at what's happening to them. I want to talk about the price of petrol. First of all, the rumor that NNPC has actually increased their price to 960. It's not official. NNPC is quite capable of issuing their releases and their statement. The actual price of MRS, Hanover, and Hayden is 970 naira. And like I said during the last session, the increase of 12%, 7% of that increase has been absorbed by the Dangote refinery. Only 5%, so 5.6% was passed on to the market. What is also more interesting is that the price of crude, as we just announced that Brent is now down to 79. At the time the prices were being announced earlier on, the price of crude was $70 a barrel. It's now gone up by almost 11 or 12%. So the cost of crude, the cost of processing, the cost of refining, and the cost of transportation of this commodity to different parts of the country. And what is more interesting is that you will see, the rumor says, and you cannot rely entirely on rumors, that in Abuja, NNPC is going to be selling at 990, while in Lagos, they'll be selling at 960. We haven't got any official statement, but the Dangote refinery is using uniform pricing. In other words, the price in Warri is the same as the price in Kano, same as the price in Kaduna, same as the price in Port Harcourt. To achieve uniform pricing, the federal government in the past had what we call a Petroleum Equalization Fund, which was used to bridge these commodities across the country to ensure that you have uniform pricing. That is over. The federal government is no longer doing that. And the only people that can do it that are now the refiners themselves. So you have the modular refiners, you have the NNPC refinery, you have the Dangote refinery, which is the price leader. What Dangote refinery has done, from all the information available to us, is that they have guaranteed quality and quantity and a price across the country. Uniform pricing is very, very important to minimize inflation. And you would see that the rate of inflation will begin to taper as we go into the months of February. One, because prices are beginning to drop marginally after the December rush. And secondly, we are still or yet to see the effect of the reconstitution of the inflation basket. But there are very interesting days ahead and we need to watch it.
Yeah, very interesting days. Definitely, we see price movements. The NNPC comes up with a price, then we see the Danko refinery come up with another price. But I get so much to look out for.
There is competition. There is competition. Competition is good for the market. And what is more important to everybody is that 50%, more than 50% of the cost increases is being absorbed by the Dangote refinery as against in other markets. I think that's very important to bear in mind.
All right, competition, definitely what we need at this point. Thank you so much, Mr. Bismarck Rewane. Always great having your perspective. Thank you.
Thank you for having me.
All right, we'll take a break now. When we come back, we get an outlook that's for Fintech in Nigeria. That's in a moment. Just stay with us. Welcome back. Well, the fintech landscape is rapidly evolving, driven by innovation, shifting regulations, and a growing demand for accessible and inclusive financial services. In 2025, partnerships are more crucial than ever before. Let's get a sense of what to expect for this year. Now, joining us is Chibuzo Mela, the head of partnership at Palmpay, joining me right here in the studio. It's great to have you.
Same here. Thank you so much.
Yeah, so, looking at, we're talking a lot about financial inclusion, so far, and, data from Efina, showing bank penetration. We're seeing Lagos State, is still leading with about over 90% there, 91% penetration. That's the banking penetration by state. We have Ekiti with 77, Sokoto 22. That's data from Efina. So, looking at before now, we're seeing improvements, so far. So talk to me about, some innovation, partnerships, and trends that we can expect, in this space in 2025 for Nigeria.
Oh, thanks a lot for that, right? Like you rightly pointed out, we're beginning to see a lot of innovation around, with the entrance of the fintech, we're beginning to see access to finance. The fintech are able to demystify payment, financial services, right? Reduce the cost for people to be able to access financial services. However, what we've seen that have driven this in the last 5 years, I will continue to see that going forward, is we've seen banks go above, see that it's more of collaboration rather than competition, right? Before now, a lot of people felt, this fintech guys are going to eat my pie. But it's not about that, really. It's about collaboration. Where you have your strength, right? I probably have my weakness there, and where I have strength, you probably have weaknesses there. So we've seen a lot of collaboration that has led to innovative products. Here, we've seen financial products that has gotten to the last mile. There was a time I traveled from Calabar to Ecom, and within that landmass, right, you don't see any bank, right? But with the fintech coming in to be able to get to each of those smaller businesses, we are beginning to see a lot of those guys have access to financial products without necessarily having to travel back to Calabar to open a bank account. Another thing you see is embedded finance, right? Today we're beginning to see services, right, now offer financial services. Today you're able to go enter a taxi and make payments while in that taxi. You're able to go on e-commerce site. A lot of them are beginning to have wallets to drive financial services. So you continue to see a whole lot of new use cases in embedded finance. Another part you're seeing is with collaboration, right, we're empowering a lot of MSMEs. Today you have small businesses, for example, the use case of the e-com, the Goja places where a lot of those businesses before now were restricted to cash. But today, right, we've empowered them to be able to make extra cash.
And you can't even find the cash even if you're looking for it.
Well, exactly. And then, aside that, right, the last thing is we're also seeing open banking, right? And the framework from the central bank, right, also gave more rise and credence to that. So what you're seeing now is where different entities are now collaborating and going into partnership to be able to share data. But then you need to get the customer's consent to do that.
I'm talking about strengths and weaknesses. What would you say are the weaknesses of the fintechs?
So in terms, we'd always look at structure, right? A lot of people will say, I'm looking at those branches, they don't have that, right? But I don't think, we may see that as weakness, but in reality, to be able to get to the last mile, you need, every business is you need to make money, right? So as much as possible, you need to be able to minimize your cost. So while we may look at that as though it's a weakness, but then we are reducing the cost of delivering financial services. And that's why today you can see a lot of the fintechs are able to do transfer for free, because rather than have brick and mortar branches where we've built, we have to employ people, we have to get fuel to drive businesses. We don't need to do that anymore. Right? And that's why
I'd really love to see at some point to see most of these companies actually list on the stock market, so that we can actually see the financials, because I'm sure the OPEX will be so little.
Exactly. We're getting there. I'm sure in the next probably 5 years, you begin to see a lot of them in the capital market. At this time, you're still trying, you've gotten people that have invested heavily in building the technologies that you have now. So, they need to recoup those investments. But I'm sure within the next 5 years, you'll begin to see a lot of this fintech listed in the public market as well.
And, talking about listing, that comes with heavy, regulation.
True.
So how's that looking?
In terms of the regulation, right? So what the fintechs have done, right? I'll probably just highlight 4 things. The first is we're seeing new fintechs that started with a license begin to obtain multiple licenses. Just as new products and new innovation come in, right? They need to acquire the relevant license to be able to play in that space. So a lot of them are beginning to acquire licenses to deliver more financial services to the last mile. We're also seeing a lot of them. So aside the licenses, we are seeing a lot of them invest heavily in new technologies to drive security, like the biometric, liveness check, and all of this is centered to ensure that customer data and customer information is protected. We're seeing them also invest in enhance their cyber security and data protection to ensure that data is properly encrypted, right? And in exchange of this data, right, we don't have data breach here and there, and they conform to regular regulation. We're also seeing blockchain also coming in, where you're demystifying, decentralizing payments. So rather than have where you have to send payments straight through and have different servers authorize those transactions, we're having blockchains come in where you decentralizing it to have better uptime, right? And then the last is we're seeing automation, right? People are beginning to automate their compliance framework. Having AI and AI coming to it and machine learning to be able to improve compliance.
Right, and talking about biometrics, I've noticed trying to use some of the fintech apps now. If you're trying to send some irregular amount, then they now tell you to put up your face and maybe move this way and that. And sometimes it gets frustrating, but I guess it's good. Is it improving security?
Well, the best, one thing you want to get is trust. You want to be sure that your money is safe, right? And we keep learning every day. There are new trends to fraud. And the CBN has done fantastically well evolving a lot of the policies that they make. And just to comply with a lot of those policies, you need to deploy new technology. So those liveness check really is to ensure that I see a new pattern. A good example is you probably always send 10,000 naira, and all of a sudden I see 100K. I need to know, is this study that is sending this?
Right.
Okay, let me see your face. And I'm matching your face against other services like the NIMC database, the BVN database. And once I'm able to match that, I know, this is Ladi. I'm not going to have problems around fraud. So it's actually to secure your funds.
But what if Ladi is held at gunpoint and he still has to show his face? Then I guess, we'll
keep learning that.
Or maybe if it sees the gun, then it'll stop the transaction.
Exactly.
All right, this is very interesting there. So, talk to me about, the kind of partnerships we can see, in 2025 that would actually boost financial inclusion more.
Well, so I don't think it's just 2025.
And beyond.
And beyond, right?
Yeah.
So I think first, certain things will drive those partnerships. We'll see a reduction in cash-based transaction first, right? And that's driven largely by evolving regulatory framework.
Because we did see the CBN fine a couple of banks in December for not making cash available at the ATM.
Exactly. Not cash. I mean, but how much are they able to take? The state bank also made new regulation with the fintechs as regards withdrawals at agency location, and all of these are geared towards reducing cash-based transaction and cash in your hand, right? So we would see more of those regulations come out, right? Because the CBN continues to learn and improve, but then a lot of those regulations will be centered around consumer protection, data privacy, cyber security, right? I mean, and it will drive a lot of partnership that you will see. However, this would then give rise to more collaboration. You'll see more partnership, more innovative products, because we begin to enter new market segments to be able to drive simplified payments in those particular sector, right? We'd also get to see more rise in embedded finance. We begin to see, I mean, you want to go to the train, a train station. I mean, we begin to see different use cases, right, to be able to make payments seamlessly and efficiently, right? We also get to see rise in open banking, right? I mean, a lot of NIBs, for example, are just created a sandbox, but one of the biggest challenge of open banking is the standardization of APIs. So as we go into the new year and the future, we'll begin to see more standardized API. And when we get those standardized API, what it does is it makes it seamless for you to be able to integrate with different partners. I think one other important thing is we also see the increase in the use of AI. I mean, I should be able to know, what does Ladi like? I shouldn't just sit down and think that Ladi and Chorizo like the same thing.
Yeah.
I shouldn't just think that the guy behind does the same thing. I should be able to say, oh, Ladi loves suits. Oh, Ladi, have you seen the suit from XYZ?
Right.
I mean,
like when the phone is listening.
Exactly.
Right.
I mean, we can even think that, oh, Ladi, your salary is coming very soon. I know you love to do this. I mean, have you tried out this store? So we begin to see use of AI to be able to deliver bespoke financial services to different persons.
Right.
And that same AI and machine learning would also help curb a lot in terms of fraud protection and all of those things. So
Fantastic.
I mean, we see a lot.
I guess it's the year of AI again.
Yeah,
At this point, thank you so much. Great having you, Chibuzo Melaz, head of partnership at Pompey. Thank you so much.
All right.
All right, so there you have it. So much to expect. And talking about expectations, the markets are trading right now. We'll give you a snapshot of what's playing out with most of the markets we track. That's at 1 p.m. on Business Incorporated. That's it from me on Business Morning. I hand things over to the Sunrise Daily team.